because our guest today is a friend of the Rich Dad Company, Rich Dad Radio, Robert Breedlove, and he's a founder and CEO and CIO of Parallax Digital. He's not only a CPA, but he's also an expert on this thing called Bitcoin and cryptocurrencies. And he's talking about what's going to happen in the next 10 years with the US dollar, gold, silver, but most importantly, Bitcoin. So before we go on, Robert was talking about something about which is beyond my head, but we had a good friend. His name is Philip Haslam. He's from South Africa. He wrote the book,
Overall. And I think by this time, so going into 2031, let's say, that Bitcoin will have continued its growth trajectory. It will have played out another one of these price cycles. Possibly its price cycle will have broken and it just gone into a long, slow grind upwards as people realize it's a game of accumulation. And I think Bitcoin by this time will have reached about 20% of global purchasing power. So this would imply Bitcoin's market cap in 2031 dollars to be about $250 trillion. So that's about 1/5 of global M2 stored in Bitcoin. Now, accounting for inflation, that means Bitcoin's market cap in today's dollars would be about 20 trillion. So in 2031 dollars, and this is a very bright line to distinguish, I think Bitcoin by the year 2031 will be north of $12.5 million per Bitcoin.
Jesus.
But
$12.5 million per coin?
$12.5 million, but adjusting for inflation, it will only feel like north of $1 million per Bitcoin in 2021 dollars, because the dollar will have lost so much of its value by then. $12.5 million will spin like $1 million. So that's my prediction for by 2031. And then that's going to clearly have some big impact on fiat currencies, including the dollar.
Well, again, that goes back to Gresham's law, is that the more fake money what you're talking about is when they increase M2 and M3 and all of those stuff they taught me in economics, which I forgot. It's just printing more money. That's all they're doing.
Right.
And so that's what gives Bitcoin and the blockchain technology so much more credibility than the central bank money. Fake money, I call it.
That's right. It's so, as I've said in a past episode with you, actually, it's a pyramid scheme.
Oh God, yes.
When we say printing money, you're not actually creating any new wealth or value.
No.
You're just shifting the claims on existing capital. And you're stealing from those that are dependent on the dollar to hold its value, which are the poor, those living on fixed income, retirees, pensioners. You're stealing from the most economically vulnerable,
right,
and giving to those with access to the freshly printed money.
Right. And look, this is why my wife and I started the Rich Dad Companies. We need financial education. Just as simple as Gresham's law. Fake money drives out good money. You have bad money. And our Federal Reserve Bank, the smartest guys on earth, don't fight the Fed. They're printing trillions.
Yeah.
And we have millions of Americans and people all over the world waiting for the stimulus check. We're going to crush them. From your financial background, in my opinion, every time we print money, we just create more poor people. That's what we're doing. What do you have to say about that? We're just creating poor people.
You're 100% correct. And the fact that Jerome Powell can go on national television and say that there's no causation between monetary policy and wealth disparity is a testament to the times we're living in. We are drowning in deception in this world. It's just the whole thing's built on lies. And I would argue, I think many Bitcoiners would argue, it starts and ends with the money. We have a lie built into our money, right? The paper was once redeemable for gold. That became a lie.
Because we violated Gresham's law. We produced bad money.
That's right.
Throughout history, the Romans did it, Germans did it, Zimbabwe did it, Venezuela's doing it, everybody's doing it. And now we have Bitcoin, blockchain, Ethereum. So that's why, as an old guy, I've got to keep my mind open, and I got to defend the old guy like Peter Schiff, who keeps going back and forth. I'm going to just buy some stupid Bitcoin, Peter. Why argue?
Yeah, it's when we corrupt and violate the trust fabric that connects us, which is money, society unravels. And that is, we have lots of anecdotal evidence of that throughout history. Every time the currency collapses, the civilization collapses. So, and I would argue that it's, clearly I'm very focused on Bitcoin. I don't advocate for other cryptocurrencies. I don't think Ethereum is going to be a big deal, or as big of a deal as Bitcoin. I think gold, it's a 5,000-year-old technology, will only be disrupted once, and that is by Bitcoin. And that's what we're going to see play out over the next 10 years. So with Bitcoin by 2031, north of $12.5 million per coin, it's equal to about 20% of the global purchasing power. So it's about half the dollar's value in total. But again, the dollar will have increased according to the law of accelerating issuance and depreciation. Its issuance rate will have increased, I'm predicting, to north of 145% by the early 2030s. This would be early stage hyperinflation. Or you could say actually probably medium stage hyperinflation. Typically a currency won't last more than a few years under that growth.
This is the infamous Weimar Republic, which led to the rise of Adolf Hitler.
That's right. Every dictator, every internment camp, every world war in human history was funded by fiat currency.
Right.
Because those individuals were not limited to the bounds of their own balance sheet. They could use fiat currency to steal the savings from the entire society and just keep going to war until everyone's broke.
It's like the story of my mother. She'd always say, "How can I be broke? I still have checks." So let me take the old guy side, okay? I'm gonna challenge you on this side. So as an old guy, I was just in Park City the other day. Again, this is March 2021 because the date, everything's changing so quickly. These guys came up to me and they were telling me about the new altcoins or something they're producing. And, when I talk to guys like you, they say, well, Bitcoin is the network. But just being an old guy, the network is like McDonald's. What gives McDonald's power is they're a franchise network. But there was also a Blockbuster Video that digital blew out of the water. Why would you go to Blockbuster where you can download digitally? So these young guys are coming up to me saying, oh, Bitcoin is trash because they're going to start another currency. So being an old guy, how would you explain to me that idea? Because it's coming out of your head. It's not coming out of a gold mine or a silver mine. But by the way, Park City was a silver mine. So how couldn't somebody just create their own Bitcoin and their own network and just blow Bitcoin out of the water?
So this is a nuanced answer to the question. It's not a straightforward question to answer because many people think, oh, iPhone disrupted BlackBerry, Facebook disrupted MySpace, something can disrupt Bitcoin. The first answer would be money itself. Why is money as a network valued? And it turns out that there are properties to money: divisibility, durability, recognizability, portability, scarcity. And then the network that gets built up around that is valued based on how liquid it is and what the network effects are. So how many people you can exchange with. This is
so let me give you the old guy's story. Okay, that's like McDonald's. I can go into McDonald's here or in Beijing and I can get a Big Mac. And it tastes about the same. The French fries are about the same. That's the network or the effect. And that's what gives McDonald's its power.
Yeah, I would modify it slightly and say, again, gold's a good analogy here. It's like, if I have a lot of gold, I know I can buy it or sell it on the market with least loss in price. So It has a lot of salability, a lot of marketability.
It's liquid. There's demand all over the world for it.
So new investors always prefer the most liquid money.
Right.
It's a self-fulfilling prophecy, basically. It's the same reason, the argument I commonly make is the same quantifiable reasons we only have one analog gold. For those same reasons, we will only have one digital gold. And then again, if you look at those properties of money that gold best satisfied historically, divisibility, durability, recognizability, portability, scarcity, Bitcoin has essentially perfected them. It's a pure digital asset, so it's infinitely divisible. It's stored in a distributed way, so the information does not break down. This is something like the Bible, right? The Bible's outlasted empires because it's distributed information. It's infinitely portable because it's digital. You move it at the speed of light. It's infinitely recognizable, meaning you can audit the total supply, you can run a node, you can verify the money supply. Anyone can do it anywhere for free. And then finally, it has perfect scarcity. It's the first asset in human history that we know has an absolutely fixed supply and no one can change.